So let's see, today we're looking at market imbalance of 1.8 billion to the sell side, which is kind of bearish. But then again, we have 4 billion to the sell side. So there was a lot of buying from 2 to 3. From 2 to 4, we had almost $2 billion of buying. So you could kind of say that was good. But then the other day, we had a lot of buy too, and we still went down. Trump is trying to reopen Canada border soon. So that means the lumber futures is probably going to go down. Because lumber futures have been making a big run. If you haven't traded a lumber future, this is pretty interesting. So this is LBS, lumber's futures. It dropped from 920 to 590. It was running up so well due to increased supply and demand, and then futures roll over, and it just kind of shook everybody. Because they knew the price for next month was going to be much lower. So that's why, shook them so fast. Trump said he'll make a fairly fast decision on TikTok, so that's going to be interesting for Oracle. So now I'm going to do the review on what's going to happen next week, what we're looking at for next week. On the half-day chart, it doesn't look that good for next week. It looks like we have more downtrend coming up. So this high is from 2 days ago. It looks like we could test that high. So that means it might be iffy for gold. It might be a short. I don't know if I want to short go. Just thinking about that for a second. The dollar index is curling here. It could either reject here or really squeeze back up. One of the first times ever in I don't know how long, man. Probably in 3 to 5 months. Let me see. So this is the half-day chart. Yeah, this is one of the first times we broke the yellow line. We always bounced off it, and that was the last stand, and we kind of broke it. We held it last Friday. We came back from it, we rejected here and broke it. So we usually bounce off here too. So should have known that was something wrong. QQQ went bearish. As you can see, the background just went red. On the daily chart, we closed under, which is really bearish. The line was 270. We closed at 267. We could be hitting to 252 next. That's a possibility. That's a possibility there. You can also see over here something that's important too is that, the other 3 days when I was bullish, we had some buying volume. We had buying power, right? People coming into the market buying. Like this was the day I went really bullish. I was like, yo, buying power, buyers coming in. But even at Friday close, I was like, we held that line, so we're probably gonna bounce. Monday I was bullish, bought a bunch of stuff. Thought we were gonna break it here, but we didn't. So I kind of got hurt a little bit because I didn't sell all the money that I made from here. So I kind of ended up being flat. And then we got more sell volume coming in here and here. So which is not good because it looks like continuation. Usually it's just green. This is looking more like this. This is the March. So, or even this one. So it's very iffy. And then on SPY, we lost the line too on the half-day chart. We also lost that line, the last stand line that we we talked about last Friday. We lost it today. We closed under it. So 3,300 was a huge line for me. I like that line. Thought we were gonna bounce it and we didn't. I thought we were gonna pull one of these. So let me pull up on the bigger chart. So I thought we were gonna pull a double bottom, do one of these risky double bottoms and bounce off it. But the fact that we kind of lost that line and we closed with some pretty big candle too. I'm kind of hesitant to think that we're gonna come back on Monday. The only way we're coming back is if Trump, did it? What did the September contract close at? 3,300, right? Exactly. $33.17. 33.27. No, it didn't hold. 33.27, right? So that's a little bit wary. I thought we were gonna pull one of these, have double bottom and come back up, but it doesn't look like we did. Monday we might have another red day. Doesn't look good. Doesn't look good. Usually after triple witching, or quad witching, we were looking at it, and usually after quad witching, which would be this day right here, it was a buy the dip opportunity, but the way we closed today, it looked really scary. And then what else we have? We have financials. Financials did pretty okay, held the line. I talked about financials for the last few days now. I said that financials is a better play than the Qs. If you want to buy the dip on something, they're one of the better financial stock I like was Bank of America, because that's something that Warren Buffett's throwing behind it. So it's got some value there. So we'll see how the financial works. And then lastly, we have the dollar index. So let me pull that up on the bigger chart. So the dollar index, it usually rejects around here. So in a way, this is actually pretty good for the market, because it looks like it's going back down, right? The dollar index looks like it's going back down, looks like it's going to get weaker. But at the end of the day, that will really depend on what they're going to do with the stimulus bill. And earlier we saw some news that's saying they may not make it happen. It might not happen because, what was it? Nancy wants 2.2. She's sticking to 2.2 trillion. So unless the Republicans meet her demand at 2.2, it's not gonna happen. And if it's not gonna happen, it's not gonna happen this week. It's not gonna happen next week. It's probably gonna happen. Maybe it might happen after elections. Who knows? So that's the only thing that can save us. If they pump more money in the market and the stimulus bill goes out, then the dollar is gonna lose value, which is gonna inflate the other markets and everything. And it looks like that might not happen in this case, even though Powell said they're gonna let inflation run wild and everything. So like I said before, I posted a few posts. I said at 330 level, that's where you want to hedge, play both sides, because it's either gonna collapse really hard, or we're gonna do a nice recovery. We're gonna gap up recovery. Regardless of either decision, it's gonna spike the premium in our favor, and we're gonna make money. That's why you want to ideally do a strangle at this point. The worst case for people that are doing strangles, if we just chop, if we just go like just flatline, for like a whole week, that would kill the strangle. So kind of like here with flatline, that hurt the strangle a little bit, but today you probably want to add on Ideally, you would want to keep adding on to the strangle at the 330 line. If it keep hitting the 330, just add on both sides. But it's not gonna flatline much. It's either gonna bounce off hard, or it's gonna go back down hard. And downward, you have a lot more room to go. It could go down 15 points. You know. So same thing here, 270 to 252. That's like 28 points. 18 points. 18 points. Let me see. Yeah, it's pretty mixed. People like wishing the dollar to die, but it's not. People are saying dollar should be at 95. I don't see how the Fed was bullish on the dollar. Let me look at the weekly trend. Oh. I see it now. Yeah, so if it breaks through 93.56, closes above that for the week, we can hit 95. So for the dollar, there's actually a play too. You can buy this stock called UUP, which is a 3 times dollar bullish ETF. It's a good play. Great to hedge your portfolio with. Very cheap to hedge it. You know, even if you have small account, you can buy a few shares. So ideally, you probably want to hedge this like 1 to 3 ratio. If you have like $10,000 in shares, a bullish position, you buy like $3,000 in this. It doesn't move a lot. It doesn't move hugely, so it's not gonna hurt you if the dollar goes the other direction, but it will save your ass if the dollar goes back to 95. So it will come back to 26 and move up $1. So if you buy 100 shares, it'll go up $100. You can even hedge it 2 to 1. Use margins too while you're at it. So that's the market outlook for the week. Kind of looking at more downtrend. Downtrend here. Yeah, that's true. You might have to hedge harder. Yeah, that's true. Um, that's why the UUP would be up like 3%, I think, right? But even then, that's a big down in stocks. So the better hedge is probably SPXS, to be honest with you. Because if the market drops hard, this would go to like $8 or $11 or even $17 if we get a major crash enough. Kind of like these major crash. This one happened in 2018, and this happened, in March. So we're most likely to come back to this yellow level. It's hit a lot of times. So if you just buy and just hold it enough, just set a sell order at the yellow level. You'll most likely hit it. So right now it's at like $6. Yellow level $17. It's almost 3 times. It's like 250%. If we get a major crash, you see the big spike. It'll be boom. But that's pretty much it for the day. Thanks for watching and staying on board. I appreciate you guys, especially you, Locke. But I'm gonna end it here. I'm gonna head out for enjoying the weekend, man. You got anything planned for the weekend? Pleasure, yeah. Nothing much. Just gonna hang out with my girl and stuff. I'm gonna head out to meet up some friends tonight. But yeah, man, take care. I'll see you next week. Have a good weekend. Alright, see ya.